All right, it is February 21st, Sunday, 2021, and this is my, I guess, trading outlook and watch list video for the coming week. And so we're going to start here with the SPY, and I guess I'll say the market outlook this week. I'm going to continue to say it's either pretty bullish or pretty bearish. Coming up, well, not continue to say, I've been pretty bearish about the market, but considered the possibility of sort of a breakout blow off top happening. And so far, well, either a big breakdown or blow off top still on the table. You can see here, if we go to the weekly chart, we have a chart of the SPY, and you'll see we started this broadening pattern. Really, I guess you could argue it started either back here in January 2018 or definitely in December of 2018. And you can see we've had two reactions at the bottom side so far, and really three reactions at the top side. We have broken out of this level on the weekly chart, and we closed above it. So right now on the weekly chart, it looks like we did a retest, but what I don't like is that this breakout was not impulsive at all. Look at this. We've had one of the lowest, I guess the volume has sort of gradually been decreasing in the past couple months, but this is quite a low volume week, two low volume weeks back to back. So although we are technically broken out of this pattern, the volume isn't there yet to confirm it. So I think there's a high likelihood that we break back down and either retest this shorter term trend line, which you can see better on the daily chart. If we retest this shorter trend line, but don't really go below that, then a breakout's still on the table, I think. But it's, I don't think that's going to happen. I think if we break down below this, it's going to more or less ignore this trend line and do a full breakdown, unless it's just, peaking a little bit below or popping a little bit below. Maybe we come down here. Right now, if we break down and maintain within this trend line, and a breakout is still on the table because there's really not much room for it to run before breaking down below this lower line. So we're just going to have to wait and see. Maybe we continue to stay within this range, and this lower trend line for this channel just gets extended, and once we're past this longer term line, we continue to move up slowly. Other option is we actually have, basically the market goes vertical or in a steeper uptrend. So we just have to see. I don't see a high likelihood of one scenario happening over the other. Usually I think what happens in this pattern is we would go down to at least test the previous high, which in this case is here, like right before the March breakdown. And so we'll see. Other option is we have a blow off top, and then that scenario plays out, or it's ignored altogether and we run up for quite a while, maybe a couple months more, before the market even thinks about really correcting in any meaningful way. So that's really my outlook on the SPY. I'm going to say continue to be cautious, and based on experience of taking all these short trades, I will say the upside until we get a confirmation of a downtrend continues to be in long position. So I'm going to continue looking for those breakout trades and probably be a little bit more biased on the breakout trades until we get a turnaround in the market and start closing below this level. Let's see. Let's look at the triple Qs, and you can see on this we broke out and we're running above this level, and we've actually held above it for the most part Although, yeah, we've got this long-term trend line since March, and you can see we broke out, held above it, then broke below. So now we're range bound between these two levels. Let me make this just black, kind of like the other one, black and thicker. So we're still sort of at a critical level. The fact that we broke below this level is a little bit of a red flag for me. If we break below this line, then we're a lot more likely to have a breakdown in the triple Qs. IWM, nothing really to see here. You can see we're still range bound between, I guess, these two, this middle and this lower portion of this trend channel. There's not really much going on here. Maybe we do a retest here and stay range bound within there. It doesn't look, nothing looks wrong with this chart right now. Take a look at the US 10-year Treasury Treasury yield next, and this one is for the stock market performance a big red flag. We're in this uptrend and we broke up strongly. Now usually these sort of rising wedge patterns and there's a breakout is a blow off top, so maybe what happens is we get rejected here, which is a pretty significant long-term level of resistance. So I think that's the most likely scenario. If something happens, or maybe we go all the way to the top of this long-term trend line or break a little bit above. I think as long as this is moving up in this steep of a pattern, it's a red flag, but we may get rejected up here and everything will be fine as far as stock prices are concerned. So if we do break out above this level, I would be like running for the exits. If it gets rejected, then everything is business as usual. The dollar index, you can see we had a breakout here after this kind of falling wedge since the March crash. We were in a falling wedge. We broke out. Now we're consolidating. And we'll just have to see where this goes next. I think it's likely that this fails, but we haven't done a full back test yet. So that's another, I think, option on the table. The longer this takes to do a full back test, I think the more likely this breakout is to fail, though. So we're just going to have to see. My expectation was that it would move up to the $92 level and fail there, or get rejected there, but it looks like we might have gotten rejected earlier than that. So this is just something to keep watching. Right now, it's not really bearish for stocks. Now this is interesting. Gold. We have made a new low since the, I guess, consolidation period has started, and it was a positive or a bullish divergence low. You can see, well, really here we've got bullish divergence, which could mean a bottom is coming soon. I don't think this is the bottom. I would be surprised if this is bottom, just because it's not like a really good level of support long term. I mean, yeah, I guess it is a level of support, but I think this level here is a little bit maybe stronger. So we'll just have to see. If you're bullish on gold, this is, right about now is probably a good buy area. Maybe not right now because it's moved a good ways from this bottom, but it's a better buy area than up here. Let's just put it that way. And I guess that's it for that gold looking at the gold chart. Silver, there's not too much to see here. It looks like it may continue to be forming, or maybe continuing to form. Maybe a cup and handle pattern. Initially it looked like this sort of funnel pattern, but you know, the longer it consolidates and moves in this uptrend, I don't know, for me the more either bearish that is, or maybe it's a cup and handle pattern where it consolidates a bit, breaks below this trend line, and then breaks out. I think fundamentally there's no reason to be bearish on silver. There is every reason to be bullish on it, except for the fact that the paper silver is, well, manipulated pretty heavily. The banks aren't ready to let it go higher, so until they are ready, or until they get overrun by buyers, the silver will continue to remain around this level or lower. If there's some sort of market crash, yeah, it's probably going to go lower if that happens before a breakout. And I wanted to talk a little bit more about some specific gold and silver stocks that I want to think about entering trades in. And the first one is Barrick Gold. Now, I guess let's flip over to the GDXJ, or the GDX first, to show that the GDX is still running within this consolidation trend channel that it's been in. And it is, if this is a bottom, starting to put in bullish divergence. So that's, you know, potentially signals that a bottom is near for the miners in general. But if you look at Barrick Gold, you can see it's broken. It broke out, and then sort of ran a few back tests, and then it broke down back into the main trend channel. And I don't know if it's going to stop at the bottom here. If it does, yeah, that's probably a good buying place, but it's burned through any sort of bullish divergence it had. And so I think this is a likely area for it to stop. So, and another thing is the call options on this, because it's been in such a long downtrend, they're really cheap. So I really like gold, Barrick Gold. It's something to possibly take a couple call options on it. It's you know, if you get a 4 to 6 month call option on it, and assume that it moves up to the, you know, $30 level, I think, before it expires, maybe a little bit higher. Basically, assuming we have a good breakout in the next 6 months, that's basically 400% gain on that call option if it hits that level by the time you by expiration. So it may be something to take into consideration, buying a call option right now when it's cheap, and possibly cut it if this continues to break down and there's, you know, a general market crash to recover some of that. But even if it goes to 0, 4 to 1 is still a good risk to reward trade. KL is similar, but hasn't broken down, and you can see it's kind of reaching, this is like the last level of support before we have a real breakdown. So I expect it to turn around here. Might also be a good place to buy a call option. I'm not sure what the target was, but I think up here a little bit higher you could get 600 to 700% return on an option, 4 to 6 months. Again, I don't remember the exact dates, but good options to look into for sort of a different speculative trade. And I may look at doing a couple of those. I don't recommend anyone else does, but I'd like to point out these opportunities where I see them. Franco-Nevada Corp, FNV, similar to Barrick Gold in that it's basically the bottom fell out of this falling wedge pattern, or this consolidation pattern, and it's hitting kind of major, more long-term support levels. Now, if it doesn't hold here, because you can see There's a couple levels of support here, but probably the more likely support is going to be back here. So if it were me and I had the capital to throw at this, I might buy a little bit where it is here, but then the majority of the position would be down here. And cut it if it continues to fall and break down below that level. AUY, this is another one, but this is more of a mid-cap miner or mid-sized miner rather than, I'm not sure if FNV is like a streaming royalty company. It's either a mining or royalty company, but it's a bigger market cap. You can see $20 billion versus AUY with its $4 billion. And just for reference, Barrick is 35 billion. And I want to note on Barrick Gold, like this looks really bearish, despite the fact that Barrick Gold had some really good news come out. Well, not really good news, moderately good news come out. And so this drop isn't really fundamentals based. It's maybe the market sees something coming, or maybe this is, the bottoming. This is around where it's going to bottom out and reverse. So AUY, this is, a mid-cap stock, fundamentally solid, but the bottom is, it's breaking down below this trend line, but you can see it's not an impulsive breakdown, and you can maybe even argue that this trend line goes a little bit lower and it's actually not broken down. We're starting to get bullish divergence if this is the bottom, so this is area I would consider buying, and maybe it will reverse here. Options on this one are also pretty high risk to reward. I calculated one out to be about 450% if it makes like a sort of bull flag move. So like say a 40% move from the bottom or from the breakout area. So around here, that would give a pretty good return for this stock. And if gold does break out, I expect this to go possibly higher than, just a little bit above the previous highs. If gold goes to like say 2100, that could be, even more returns for this one. AAG, this is one, I'm super bullish on just because this longer consolidation pattern that tells me it's more of a coiled spring that's really ready to rip. And we had this little this breakout, and it's, if you go to like the 1 hour chart, it's more clear that this is consolidating and ready to possibly break to the upside. We'll see. Maybe it does a back test and runs. Maybe this is a cup and handle pattern. I'm really not sure, but I would say if this breaks down and retests the long-term trend line, that's a good entry point. Right around where it is might be a good entry point, just because a good starter point, and then add more at a back test of the longer term trend line, because I'm not sure this is going to back test just because it's consolidated up here for so long. We'll see though. And on the weekly chart, yeah, the price action's a little funny on the weekly chart. I mean, you got this huge spike and then it kind of just goes flat rather than doing a back test. Although you can argue it was almost a back test week 2 of this breakout. So we'll just have to wait and see. I mean, I expect this to follow the price of gold or to slightly lead it. But I have a pretty good leverage on the price of silver. Okay, so I'm going to get into the stocks I am looking to trade this week. And these are not positions I'm in necessarily. These are just like, I guess, my top 20 or so stocks that I want to have on my watch list for trading if they if they satisfy all of my trading criteria. They're basically good setups, no confirmation yet. Sandstorm gold. This is one where if gold breaks out, you've got a pretty good risk to reward ratio on this one. It's a higher market cap stock, so yeah, it's probably going to look something more like this if you enter a position. But let's say it goes to the top of the range. That's almost a 10-to-1 trade, risk to reward trade. So we're just looking for the impulsive breakout, which would include the breakout in gold. Xilinx. This is one where one of the semiconductor basically stocks, you can see it's been in this sort of uptrend, long-term uptrend, and it consolidated, well, at least since the March lows, it has moved up, consolidated, moved up, and it's consolidating again. I think if it moves, breaks out, it's going to have a nice percentage gain for a pretty good risk to reward trade. So I'm looking for the impulsive breakout or a breakout and then a back test to enter. Comcast, this may be a missed opportunity now, but I'm looking for whether this breaks down. If it breaks down, maybe it's a good short trade. If it breaks out though, and the reason I say a good short trade is because you've got this megaphone type pattern that it's likely to move to the bottom of, which would be like only a 10 to 12% move. I might pass on this one if it's a breakdown, but you can see if it breaks out, it's a 15% move. You can see it's been in a long-term uptrend. If it does break out, then it's probably going to make another up leg like what you saw here. Hopefully it doesn't gap up. If it does gap up, then basically that means the trade is gone without me. If it starts here and then gives an opportunity to get into the trade, then that would be a good long position. Costco, similar story where this one has already had a correction of, pretty good correction of, well, only 5%, but I would be looking to take a trade at least to the top of this bull flag that has been forming. Not an amazing risk to reward ratio, but a pretty nice consolidation pattern. And I think there's probably more upside past that. I'm just not sure the best way to analyze that. I mean, if you say since the last, kind of bull flag, that's, a 32% move, which would put you way up here, which would probably make this, a 15 to 20 to 1 risk to reward if some shares were held up there. So I'm just looking for a breakout, nice impulsive breakout or a breakout and back test to enter long. Box is another one where it looks like it's been in a long downtrend and it put in a bottom during these March lows, and so now it made a higher high than the previous, I guess, high, and now it's consolidating, and if it breaks out, I think it'll be a pretty good risk to reward trade, pretty good profit target percentage. So that's what I'm looking for, is impulsive breakout. Corsair, another stock that's gotten a lot of hype, and you can see we had a false breakout here, but it's in a nice consolidation pattern. So really I'm just looking for a real breakout to the upside, and that's when I would enter long. And I would probably take a profit target of, about here, 50% or so, which is about what I put here on this chart. And I've already tried to take a couple long positions on this one, none of which have worked out. I still think it could work out though. D-Dog, the chart looks very similar to Corsair and sort of in terms of the consolidation. It had this sort of funnel consolidation, false breakout, but it hasn't broken down. It's looking pretty strong. bounced off this secondary resistance line, so it hasn't gone to the bottom of this range. That could mean it's ready still for a breakout, and so I'm looking for that trade, and probably I'd be looking at like 38% or so upside on this one. Aloe, this is one that looks to me like it was bull flagging for a while and broke out and is making a smaller bull flag. So I'm looking to enter, well actually I'm already in this trade, but I would enter this trade still at the level it is right now because it has broken above this level. Maybe I would wait for a back test and then enter the trade at this point, but I think either way is pretty good risk to reward. Although yeah, at this point if I entered I might want to wait for a back test. Okay, CLH or CELH. This is another sort of funnel pattern slash bull flag where I think this one could break out to the upside, 32% move or so, and probably would be around there. Maybe not the best risk to reward trade just because there's not much consolidation. So this is one I'd have to think about. I might take this off my watch list. If you consider this a breakout here and a move to that, well that's like 200%. That would move you up to maybe here or so. And now that's a crazy risk to reward ratio. So maybe you would cover some shares, or I would cover some shares up here and then cover the rest up there. Because I'm not sure what a great profit target is for this. I think that's something I need to learn about, is how to select profit targets for certain ones of these trades where it's not super clear that it's a bull flag pattern or whatever. Solo, this is one that is very clear. Well, you had a pretty clear reversal here, bottom and reversal, and now we're in an uptrend, and I'm looking for a back test of this breakout area, and that's where I would enter long. I already entered long, back here, but I of course got stopped out because this kept going down. So now I'm looking for an actual back test. This hasn't done that yet. Spirit Airlines, this is one I was short on until a little while ago, I think, when it basically made a full recovery, and it looks like this is making an impulsive breakout. So we'll see if where it is right now, I'd be happy to take a long position, but if this is a true breakout, it's likely to move higher faster than I can get in, so I'd be looking for a back test. Maybe I'll put in an order and see if I can get a partial position here before the market opens tomorrow, or right when the market opens. But it's got quite a bit of upside. You can see there's really no resistance until unless you consider this resistance back here. But if you consider the more recent dates, there's no resistance until you go to basically pre-breakdown levels. STMP, this is another one I'm long on, and you can see it's been in this consolidation pattern for a while. Broke below, false breakdown, and then got rejected hard at the top here. So I'm looking, well, I am long already, but I'd be looking to go long at the bounce if I wanted to add or something. MRK, this is let's see, yeah, this has sort of been in a long kind of consolidation pattern, I guess, between this upper trend line and this lower level of support. And so I'd be looking to, if this bounces, take a long position. And basically I would cover up here at this support line or trend line. ASML, this is one of the few ones I'm still looking at shorting. It hasn't broken down yet, so if the market does break down, there's a lot of potential here. Another thing I like about this, which tells me I should wait, is it has like 11% short float. So a lot of people are bearish on this, which means there's a big potential for a short squeeze and a good entry for a short position once that happens. Zillow Group, I still think there's downside on this one if it does not bounce below this. I mean, if it basically breaks through this trend line here, I would be looking to go short on it again. And I would make the first profit target here and maybe the second one here. And if it breaks below that, well, probably down here. So Chewy, this is one where it's been in a long uptrend, a lot of negative divergence, and all these short trades I have negative divergence, except for Zillow, which had what looks like a blow off top. So Chewy also has this negative divergence pretty recently. Peloton, oh yeah, I guess to finish the explanation of this trade, I'd be looking to trade it to the bottom of this trend channel where it broke out of. Peloton, this one has run up pretty far, pretty fast, and has been, it looks like the momentum is really down. It put in negative divergence here, and it's consolidated for a while, and it looks like this may be a false breakdown. If it is, then this is probably going to rocket, and maybe I'll even take a long position if I see that happening. But if this breaks down, like if this is just a true breakdown, then I might take a position where it is now, or if it does a back test up here. What I'm not sure about is that this is not an impulsive breakdown. You can see from the top, it's already been like a 20% correction, but given the amount of volatility in the stock, that's not that crazy. Okay, CRNC. This one is just another stock that's moved a lot in a short amount of time, basically 400-500% since March last year, or pre-March breakdown. And this is pretty clear negative divergence for a long time. I'm not sure what the short float is on this, but I would look at it. Obviously, if it's a high short float, I would wait until a short squeeze to get in short on it. Phillips 66, this is one of the oil trades or one of the oil stocks, and oil has gone pretty far pretty fast lately. At least that's what a lot of people are saying. And so I think there's a potential top here where it would correct after that. You can see the last time it hit this level, it made a correction, or basically went down quite a bit, 50%. I think the next time that happens, it's not going to be anywhere near that. Maybe we move down to here or here, but it is a good percentage gain if it is shorted here. Now there is possibility it's going to break out. I don't think that's very likely, just because you only would have two reactions, I guess one reaction plus these reactions back here. I don't think they would count that much. I would consider attempts to break through more significant, breaking through to the upside after this March crash. LI is the last one I'm looking at. Now this could be bullish or bearish. Right now I'm not really sure what it is, because it broke down, but there was no impulsivity to it. It's not done a back test. So if I can get in right at a back test, I may enter that position and take a smaller size, so that if it blows right through that, trend line to the upside, then I won't take a big loss. And if it does break to the upside, I think it's a pretty good trade to take as a long position. So I really don't know with this one. I think it really depends on where the EVs are going in general. I don't think I showed this yet, but Tesla was, I mean, Tesla looks like it's bull flagging if you look at it from this perspective. If you change this trend line a little bit, maybe to here, it looks more like it broke down. And so I don't like this trend line as much, though. I think this is the more valid one. So I won't really say anything about Tesla yet. It kind of gave a scare, but you put in a bottom here, still has negative divergence, so, or sorry, still doesn't have negative divergence. Each new lower low it has, no bullish divergence. So we'll just have to see on these EVs. And I think that's it for this week's trading outlook. I guess just to summarize a little bit, I'm not sure what to expect with this week. I think it could be bullish, or it could be choppy, or it could be pretty bearish. So I think whether it breaks one of the significant levels, whether the market, like the SPY, breaks one of the significant levels I pointed out to the upside or downside, will determine mostly the direction of positions I take next week or this week. So thank you for watching, and I guess we'll see you next time.